today in Clavio, and not necessarily the best trading day for Instacart and ARM once again. The net effect of it all is the Dow Jones Industrial Average lower by about 0.2%. The S&P 500 giving back almost 1% on the day, or roughly 41 points, a close right around that 4,400 level, a key technical level there. The NASDAQ Composite down about 200 points, or 1.5%, while the Russell 2000 looks like it's going to finish out the day lower by about 0.9%.
All right, quick look at the S&P 500 in terms of the names, about 173 to the upside, 328 to the downside. So certainly more of that risk-off trade, no doubt about it, and 2 unchanged. Scarlett.
Yeah, volume also slightly lower than the year-to-date average. Let's look at the sector performances here for the S&P 500. It was a down day for the major indexes, as Romain told us, but there are some sectors that did finish higher, including telecom names, healthcare equipment, and food, beverage, and tobacco. So you're seeing a lot of those dividend plays, those safety plays come out ahead. On the flip side, you've got a lot of those big tech names, media, entertainment, semi and semiconductor equipment companies, and tech hardware, along with software and services, all leading to the downside, all down by at least 1.5%.
All right, a little nervous, making sure that my gainers actually held on to their gains, but let's go to it. Clavio, right? The IPO. It's been a big week.
Not all of them said Carol. Can we just get rid of that fourth one?
Darn it, gosh.
Yeah.
All right.
Can you just black out her box?
You know,
Wow.
again, I'm here. I can hear this. All right, so Clavio up about almost 32% at its highs today. And its first day of trading as a public entity here. Finishing up, though, with about a 9% gain. It was oversubscribed nearly, I think, 30 times. So, you know, it's interesting. Limited supply, another one of those kind of IPOs, but nonetheless, a gain, but lost a lot of that momentum that it saw earlier in the session. Pinterest, I want to go there because it's been on quite a 2-day rally, up another 3%. It gained 3% yesterday. Analysts were impressed by Tuesday's Investor Day, saying that the social networking company was upbeat and that the long-term targets look achievable. It's up roughly about 12-13% so far this year. And then Enphase Energy, once again, rallying up 4% yesterday, up another 1.5% today. News Monday, late Monday, after the close at co-director Thurman Rogers bought about $4 million worth of shares. It's the only news I could find, but it looks like still some momentum. Still down more than 50% year to date, and you got about 8% of the float shorted. Initially, a lot of other solar names were higher, which meant the Invesco Solar ETF was up almost 2% at its highs today, but finishing with a decline of 0.1%. So over to you, Mr. Decliner.
Handing it off to me.
I
Okay,
am.
I'll take it. I'll take it. Let's talk about some of the stocks that moved lower on the day today. In the S&P 500, mega cap tech declining after the Fed's higher for longer message. Apple among the worst performers on a points basis in there. Microsoft there as well. Nvidia, Alphabet there as well. We should note that Dow Jones also reported a note from UBS's David Vogt that questioned demand for the Pro version of Apple's new phone, saying demand was not as strong as it was for the Pro models last year. And then Zebra Technologies, the worst performer on a percentage basis in the S&P 500, down 6.5% today. It's a company that makes barcode scanners, interactive kiosks, and more. Got downgraded to underweight from equal weight at Morgan Stanley. Morgan Stanley analysts writing that the pace of recovery at the consumer electronics company will likely be slower than expected. And then let's check in on Maple Bear. That's, of course, Instacart. The price for that IPO was $30. It closed today just above that IPO price. Yeah. So hung on to that, but still down 10.7% today. This after raising earlier this week, $660 million.
And the do you know why it's Maple Bear?
No.
Oh.
Well, anyway.
Do we have something more important? Let's go to something more important.
Well, something more important, I would say, is the bond market.
Yeah.
I know
Yes,
there were some interesting
totally.
single stock stories, but on Fed Day, of course, we got to take a look at what's happening across the Treasury curve, all the action in the front end. As you can see there, you have 2-year yields managing to rise 6-7 basis points, 5.15%. That is the highest 2-year yield since 2006. You go out the curve, not as interesting. You have 10-year yields. I'm going to call that unchanged. Your 10-year yield about 1 basis point higher, 2 basis points higher, 4.37%. That curve back to inverting rather at about negative 78 basis points remain.
Yeah, we actually still getting some earnings, believe it or not, here. Those kind of the last stragglers from the past quarter. FedEx out with their numbers here for their fiscal first quarter. Revenue coming in at about $21.7 billion. That's a smidge lower higher than what the street was looking for at 21.84. But operating income does look like a pretty solid beat at 1.59 billion versus a street estimate on average of about 1.34 billion. Here's your forecast here. The company basically saying that it sees full year adjusted EPS at 17 to 18.50 a share. The previous guidance it gave was 16.50 to 18.50, so effectively just raising the lower end of that range by about 50 cents. You can see the price reaction there, the knee-jerk reaction higher by about 2%.
And of course, when it comes to FedEx, what's notable, of course, is how it stands in contrast to UPS. UPS had to give big pay raises to his workers who had threatened to strike. FedEx, of course, is has been cutting costs and has been doing that. And the CEO says that they're well positioned to deliver, they've started fiscal 2024 with strong momentum and are well positioned to deliver improved profitability. So, kind of just putting that out there and reminding everyone.
Yeah, they're not apples to apples when you look at FedEx and UPS. We often talk about their different models, but man, investors have been really sitting up and taking notice of what FedEx has been doing in terms of transforming the company. I mean, it's up more than 40% this year. You've got UPS down about 9%. They are, of course, have been, concerns with the strikes and so on and so forth. So very different stories for these, but it really does feel like Wall Street investors have taken notice of what the changes they've made.
But it's interesting, too, to look at this report as well as a couple of the reports and to sort of tie that into some of the questions that Powell was peppered with here. This isn't a revenue growth story. I mean, this is cost cutting. And I think this is the fear that a lot of investors have that, that's great in the short term. It gets you through the quarter and it bolsters the stock price. But how much longer do we go like this, particularly if you do believe that rates are going to stay higher?
Yeah, the press release, Romaine, literally spells that out. It said that first quarter results improved primarily due to the execution of the company's Drive program and continued focus on revenue quality. But, and this is a big but, the improvement in operating results was partially offset by ongoing demand weakness.
That's the thing. I mean, it's you can cut costs. No one's poo-pooing that, right? But you can't sort of cut your way to prosperity, more or less, right? And you sort of wonder what the strategy is for FedEx. And we don't want to just pick on FedEx here. A lot of other companies are in the same boat as them. Other blue chip companies are in the same boat as them. And I wonder if that's sort of the next thing that the Fed really has to be mindful of. We so focus on the consumer and the homeowner, but we forget there's stresses out there for businesses as well.
But maybe against this backdrop, that's good enough. And you can see that in the share reaction after hours, FedEx shares up 2.5%. To your point that, I mean, that's not necessarily growing, that's cutting costs. But you think about some of FedEx's peers, maybe cost cutting is good enough to make it stand out.
Well, and sometimes you have to clean house, right, to get to a better business strategy or business equation. I do also want to mention that, and could be another reason why the stock is popping. Company expects to buy back an additional $1.5 billion in shares during fiscal 2024. We see companies doing that a lot, when they've got some excess cash. Again,
So $1.5 billion to buy back the stock.
Right.
Not into CapEx, not into the business.
It's not building the business,
Okay, got it.
paying workers, whatever.
Okay.
But it allows you to buy time while you wait for things to recover, right? I mean, Jay Powell made it really clear that the economy is doing better and holding up better than a lot of people anticipated, certainly than the Fed anticipated. And so demand might be more muted than it was before the rate hikes, but it's held up for the most part.
No, you do wonder, right? You can't cost cut your way to, a really strong company, but you can certainly make investors happy maybe for a little while. So more to come, certainly, on that story. Guys, that's a wrap. All right, that'll do it for our cross-platform
Happy
coverage.
Fed Day.
Happy Fed Day.
Good to see 5 of us.
Yeah.
Did Tim say big butt before?
No.
He did, you did. It's
On
a
what?
big butt. You said that.
Oh, okay.
Sorry,
Maybe I did. I'll
I
go
know.
back
I'm
and
being
look.
like an 8-year-old again. That's a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We will see you again tomorrow.
Stick with us. A lot more coverage coming up here on Bloomberg Television. A reaction to what we learned out of the Fed today. A reaction to what we learned in markets as well. David Balin from Citi, John Taylor from Stanford University, and Raghuram Rajan, former India Reserve Bank governor. All that and more coming up in just a bit. This is Bloomberg.